Hello and welcome back to News You Can Use, the TF Team podcast. I'm again, of course, joined with Pierre. Pierre, we hear that you were on a little bit of vacation recently. Where did you go? And tell us about that.
Oh, man. I packed down 10 pounds. Not that you could see it, right?
Looking great.
It's all here.
Exactly.
It's all in
gray matter.
Gray matter. Yeah, no, so I was on a cruise, a Caribbean cruise. We went to Saint Martin, Dominica. We went to Barbados and Grenada. Started off in San Juan, Puerto Rico, which also happened to catch Canada play Panama in the World Baseball Classic this past Sunday. But all this to say, I'm enjoying life because I had a plan. I paid very little amount for the trip because it was all on our points system with all of our air miles, our Avion card. So it didn't cost us a great deal. But we come back, $1.52 gas. What happened to the world? I was only gone for a week and a day.
Pierre, you should never go away again. I mean, I don't know what happened. You go away for a week and just the world seems like it's falling apart. But I guess that's just 2026 for you.
I'm not leaving.
No, please don't.
Right? The stock market went down a great deal. And what do you say about oil prices?
Well, let's say the past weekend, oil was jumping furiously. It went up to about 120 in weekend trading before dropping back down to about $85.
Yeah.
So it was this crazy roller coaster while stocks were plummeting at the same time, but they have also been recovering at this time as well. So it's a tumultuous time.
Yes, it is.
And so what is the best thing to do in these times, of course?
Have a plan.
Right.
Right. I mean, it's funny. We talk about this every week, and I'm sure you as listeners and viewers, it's like a broken record. But really, if you panicked this past week, then you would have sold when the market was at its lowest, and then all of a sudden the market stabilized, and then you figure, okay, it's time to get back in. You know what? Your plan is a long-term plan. It's not a daily plan. It's a long-term, which takes into consideration the ups and downs. And if you don't have a plan, it's time to get a plan.
Absolutely. So planning, always important, always key, something we always stress here on this podcast. Again, as you mentioned, I mean, the stock markets did do a bit of a sinking. So if you did obviously overreact and call up and say, sell, you're probably regretting that. On the flip side, that's also a great time to buy.
Oh my goodness, BOGO, right? Buy one, get one free. This is a great time. Most people go to Marshalls and Winners looking for, quality at a discount. Well, guess what? All these good blue chip stocks were at a discount this past week. I'm lucky, and a lot of my clients are lucky enough that we buy either on a weekly or per pay, so that way we are able to buy on the dip. So it was a good week in a way. If you're an investor and you're not looking to withdraw, you were able to pick up some companies. Gold kind of retreated, so you were able to buy gold again at a decent price before it continues its way upward. So again, have a plan and consistently follow that plan.
Absolutely. And don't overreact. Stick with the plan if you can. So another thing that this sort of brings up, bond yields. They have been fluctuating a bit lately. They have been going up. So what does that mean?
Yeah. You remember your worst topic in Canadian security,
well,
which was bonds. Not necessarily that you did poorly, but you didn't truly enjoy the concept of bonds, and most people
didn't truly understand.
No, you did, but it's not a sexy thing. So most people think when it comes to mortgage rates, it's impacted by the Bank of Canada rate, but the biggest impact to mortgage rates is Canada bond yields, right? Typically the 5 to 10 year bond yields. And what we saw the bond yields inch upward. So they went from, I believe, 2.67 to over 3%. So, almost like a 50 basis point increase. So what does that mean? Well, it means our mortgage rates, which are tied to bond yields, should be inching upward. Now, the good thing, if you had a plan and you were locked in about, a week or two ago, then whatever rate that you had secured about a week or two ago, you will be guaranteed that rate. So typically for 60, 90 days. So if it does come back down and continues to go down, then you get the best of the lowest of the two rates. So it had an impact not only to oil prices, but it also had an impact on the bond yield, which has an impact on mortgage rates. So which is kind of apropos because we're doing the mortgage seminar for first-time home buyers on Tuesday, March 31st. So hopefully the yields, and I've already saw it kind of stabilize again. So hopefully by then nothing damaging occurs in the markets and the rates stabilize again.
Okay. So again, if we can take anything home from this, it's that the markets fluctuate, but if you have a plan in place, you should be able to weather out that storm. So the key is, of course, get that plan, get that emergency fund going. If you can, take some of your income and automatically put it towards your savings or towards investments. So it's a more painless way of investing, right? And just make sure you do talk to somebody about that. I know we do have obviously a great team right here at the TF team. And again, if you can join us for that webinar on the 31st, we'd love to see you there. And you can always leave us some comments as well. So welcome back to Canada, to the Great White North. We hope you never go away again because I don't think the markets can really take this kind of stress.
I don't think it can, and I don't think I can.
Fair enough. I'm losing my hair here and you're gaining 10 pounds. It's terrible. So.
You're right. So I think kind of in closing, with regards to mortgages, probably the next the Bank of Canada is meeting on March the 18th, and at that time it's going to either maintain the rate, lower the rate, or God forbid, increase the rate. So I'm thinking because of all the volatility and, there's certain things that are beyond their control, they're probably going to stay pat and wait to see if the next shoe is going to drop. And then they might take some monetary strategies to kind of mitigate whatever will come down the pipe. So I'm not leaving. Tiff Macklin, don't leave neither. Hopefully everything works out and we've got some stability in the world and a stability in our markets and in housing prices.
Excellent. Well, thank you again for your input. Again, this is news you can use with the TF team. We thank you again for joining and we hope to see you on March 31st for that webinar, 6:30 to 7:30. Again, always leave your comments below and always like, and we hope to see you next time. Take care. Goodbye.